watching the Mutual Fund Show with me, Tamanna Inamdar, on NDTV Profit. Now, a few days ago, SEBI chief Madhvi Puri Buch said that the regulator is in talks with participants of the mutual fund industry, with fund houses, to look at the possibility of smaller SIP sizes as low as 250 rupees. Now, to be clear, some fund houses offer even now micro SIPs as low as rupees 100, but it's not really the norm. In terms of viability and cost to funds, obviously, larger ticket sizes are preferable. But the thinking in the regulator's mind is that a lower ticket size will mean more penetration in the market, more people will be able to afford it. And the analogy given was quite interesting. It was compared to how FMCG companies really look at smaller sachet sizes. So if you're selling a shampoo in a smaller size, maybe more people are likely to buy it. But is that the case when it comes to investments and mutual fund investments? Now remember, we are seeing a consistent increase in retail participation in mutual funds. And we're, even if you look at a figure like SIP inflows, monthly SIP inflows, you hit an all-time high in November. You've crossed 17,000 crores. Your number of folios month on month is increasing. You've crossed the 11 crore folio threshold as well in the month of November. The question is the 250 rupee idea going to be a game changer? Is it worth it? And will it really be enough? To speak on this, I'm joined today by Vishal Kapoor, CEO, Bandhan AMC, and Monika Halan, author, Let's Talk Money. Welcome to both of you, and thank you so much for speaking with us on NDTV Profit. Absolute pleasure to have you here on the Mutual Fund Show. Vishal Kapoor, let me begin with your take, because while it sounds like a great idea on paper, are AMCs a little hesitant about how much it will cost and whether it will really make a difference?
Thanks for having me, Tamanna, firstly. No, I don't think AMCs are hesitant. In fact, at Bandhan Mutual, we've had SIPs across most of our schemes, if not all our schemes, at 100 rupees. So it's not 250, it's even lower at 100. And we were trying to solve for this question about affordability of investment, way back since 2017. So we've now seen this behavior over the last 5-6 years, and I'm happy that almost 11% of our SIP book is actually coming at that very, very low level of, between 100 to 250, so even lower than what the chairperson has suggested. So affordability is not as much a challenge. But I think the idea in general that she's spoken about is a brilliant one, is an important one, because we still have to tackle the other two aspects, if I were to put it as the 3 A's that we're trying to solve. Affordability is okay, but access. How do you buy it? Where do you buy it? And appropriateness. Are you buying the right product? Is it, the shampoo example, the sachet example is a good one because it encourages some amount of trial. So are you going to try the right product or the right package so that you have a good experience and therefore you continue with that behavior? So those are the 2-3 things that we still have to solve. And yes, we also have to solve the cost questions, because certainly at 100 rupees, it's not economically viable for an AMC today, given the cost structure. The assumption is let's get started and build scale in this, then hopefully the cost will also play out.
So will the cost play up, and will this be a game changer? If that's the question, then Monika Halan, if already 100 rupee ticket sizes exist, why then this policy push for 250 rupees? Is it because it's not prevalent enough? Is the problem the amount that people have to put it in SIPs, or is there a bigger question there?
Tamanna, I think as chairperson of the capital market regulator, she is aware that her statements are taken very seriously by the industry. So it's a sort of a statement to say, go micro to the industry. And what we have seen in the past 2 decades, that the mutual fund industry has innovated very, very sharply, very smartly, has built in efficiencies. And the middle class market is fairly aware of the product, is investing. Like you said, the SIP book is nice and fat and growing. How do you take this product to the newly financially included person? To that extent, I think it's an important statement that she has made. I don't think we should get stuck on the 250 rupee number, but rather look at the direction that she's pointing at and saying there is a huge market, and India is moving from a poor country to a lower middle, and then middle income country in the next 20 years. So I would look at her statement as a motherhood statement of saying, look, you have another decade in front of you to expand the market. And instead of just the market that you have solved for already, can you now turn your eyes on the volume market? Because the initial costs will not matter once the volume kicks in. So I would just decode her statement as a directional statement to the industry to say there is huge opportunity and the product has gone through fire, has established itself. So therefore, it is a product worth taking to the masses. Go ahead and do it. I will decode it in that way.
Yeah, but how? The question is how? Directionally, yes, it's absolute there.
Right.
Absolutely there. The question is how and where? What kind of a market does this go into? Right. So I just want to come to Vishal Kapoor for a bit of color over there. Since you've said you've already had a lot of these micro-SIP schemes, how have they done proportionately? Are investors preferring these, Mr. Kapoor, and in what segments? Because that will give us a bit of a picture of what is the target segment for a chota SIP.
Right. And I think, like we said, the entire idea is a powerful one, which is you're encouraging trial. So the concept that we saw with consumer products, that when you make it a sachet and you encourage trial, then adoption becomes easier. Mutual fund SIPs have clearly proven that they are a great product for the average saver and take the first steps towards a capital market product. And therefore, conceptually, making it affordable through a low minimum is a great first step. But I think what this challenges the industry and the entire ecosystem to do is to make it viable and build scale. And I think, therefore, the challenges that we have to solve for, and some of these may not be solved today, and I think that's the lead that we would take from the statement, that how do you get access, firstly? Because keep in mind, at 100 or 200 rupees, there is little incentive for someone to actually put the full proposition up there. But with the help of fintech, as an example, where you really don't have a marginal cost of making a face-to-face effort to try and convince someone, can this problem be solved? Now, as we get into fintech, I think we recognize that a lot of our communication tends to be in largely just a couple of languages. So now with AI and a lot of development that's happening on tech, where Indian languages over time we expect will be available through large language models to be converted and translated very easily, can this problem be solved? Similarly, when we look at access points, with data and the entire fact that most people now have a mobile apart from Aadhaar. I think the JAM Trinity has already solved a lot of these challenges for us. But if communication can be solved, I think mobile and technology allows the delivery to get solved. Affordability, like I said, is already there. The last mile is also appropriateness, so that when someone does take this first step of starting a small SIP or micro SIP, how do we communicate after that to make sure that the right information, the right updates are provided so that the experience is good and eventually this is encouraging for the person to scale up. So some of these elements in the value chain still have to be solved. One part of that, and this is not the only part, one part of that is that eventually this has to be viable at scale, and therefore the entire cost of things like KYC, things like the payment remittance cost and things like that have to come down. And one KYC, as was recently announced as yet, can be a big step in that direction. So if funds don't have to again do the KYC, and therefore that is a cost saving, then that can be a big booster to this entire effort.
Just on the part of sampling, just a follow up there, Mr. Kapoor, and because we've had this sort of FMCG parallel. The product itself is not given to a short-term sampling. If you are in there at a time when perhaps overall markets are not doing too well, or there are negative things that happen, or the precedent is negative, or the experience is negative in the short term, it might in fact have the adverse effect. At a 250 rupee ticket size or even a 100 rupee ticket size, is the investor someone who has enough staying power to give it 3 to 5 years to really know what this means for them?
Oh, very true. And I think that's exactly some of the challenges that we have to solve for. Like I mentioned, the 3 A's that we were trying to solve for is affordability, access, and appropriateness. And I think that's what you're talking about, which is it appropriate for this person who's saving with this 250 rupees? Can she afford capital loss? Is the first question we have to ask. And when that happens, which is inevitable in a capital market product, how do we handle, how do we make sure that they stay the longer period, etc. And what we've seen is that while the bulk of individuals putting money through SIPs are largely in equity funds, but we should not ignore SIP as a habit through fixed income mutual funds or hybrid mutual funds. So if this is a first time investor where the potential or the tolerance to capital at risk is very low, and we want to start the habit, then some of these other products that the mutual fund industry offers may be a good starting point to form the habit and get someone used to how this works, and then eventually some amount of risk appetite can be built into the product choice that is available.
Monika, your take on this, because we're looking at an idea which theoretically sounds very, very good, that yes, you have smaller ticket sizes, more people will come in, more Indians can benefit from the kind of returns we've seen in the equity market. Why should everyone not benefit? The question is that level of understanding there for a wider pool of investors that this might give you some pain in the short term? Right.
So therefore, I think, Tamanna, it's very important that the categories are restricted when this product does come, when this 250 rupees SIP is announced as an industry-wide initiative. It should be restricted to either both Nifty 50 and Sensex index funds only, because there are 11 categories of equity funds and there are 16 categories of debt funds. Each of these categories has a very different risk-return profile. So even within equity, you will have higher risk funds which are big cap and small cap. My suggestion is that the offering is restricted to only the index-linked products, so that this the fund manager risk is taken care of. So this idea of Har Ghar Nifty can also be understood through this 250 rupees SIP in a Nifty or a Sensex index fund, because I worry about introducing risk to a newly financially included household. The driver, the contract worker, the unorganized, unskilled worker. And I must say that they are very keen to onboard. So if there are conversations with that category of workers, they have now understood there is something called mutual funds. They want to onboard it, but they don't know how, and they don't know how to decode this risky product. So I think it's up to the industry again for a massive, major educational drive to educate the people on how short-term there could be volatility, but look, long-term it does well because of these 3-4 reasons. The whole story of the different stocks in the Sensex, and on the back of a growing economy, what kind of growth you can predict. So it's in the education along with the access becomes a very, very important part of the whole story. Because I think people are willing, they want to onboard, they want higher returns. And it is then up to the industry to make it possible for them to actually understand the risk in a coherent manner when they got on board the product.
That's a very important point. As catchy as Har Ghar Nifty sounds, how do you ensure that people know what they're putting their money into, considering? Let's look at the patterns that we've been seeing. The interest in, for example, small cap funds, to an extent where fund managers have had to push back. I'm going to take a very short break on the show, but we're coming right back talking on that angle and a lot more. Stay tuned. back. You're watching the Mutual Fund Show. In case you are just tuning in, we're speaking today about the idea of a chota SIP. Does it have a big promise or a big potential? And what are the challenges in actually achieving the dream of Har Ghar Nifty? Vishal Kapoor, CEO of Bandhan AMC, and Monika, Halan, author of Let's Talk Money, are with me on the show. Vishal Kapoor, before the break, Monika made an interesting point about perhaps limiting exposure for micro SIP contributions to specific segments. Is that what you are already doing with your 100 rupee ticket size? Do you think that's a good idea?
I think the concept that as you start the journey with SIPs and mutual fund, capital market products in general, being graded and very, very definitive about how you want to take on risk is an important one. Because we don't want to suffer situations where people just rush in based on a certain theme or a certain past track record, which may not be sustainable, and therefore get disappointed and then just lose out from a potentially great habit that they were getting started on. And therefore, calibrating how much risk you want to take is an important idea. Doing it through an index fund rather than actively managed fund, where at least you take away fund manager risk, is again one step in that direction, and some amount of equity in that mix is of course the idea. But I would also add a few hybrid products as an example that one could actually add apart from the Nifty and Sensex index ideas that Monika shared. But yes, conceptually, I think the important thing is that people coming in to sample the small or the micro SIP, they must have reasonable understanding of what they're getting into. We understand that this may be an economic strata that is not open to a lot of capital loss or erosion, even for temporary or small periods of time. But that education cycle is very important, and which is where technology, local language being available, some of the communication being as simple, and through the industry's effort and education at a mass level, these could be ways in overcoming this. And certainly product choice being limited will simplify things. So therefore, as a starting point, I would definitely encourage an approach like that.
But just to contextualize that, Mr. Kapoor, with what the demand is right now, I'm not saying all of it, but the big push and the numbers that we've been seeing month on month in new folios, in SIP numbers, is also coming because markets have been doing well. You would agree. And if you look at where the interest is, the kind of rush towards small cap funds, what happened after that, and of course the industry itself pulling back a bit, saying that, listen, let's go easy, let's go slow. So how do these two realities sit, that you need to expand the pie, but people are also coming in because they are looking at gains? There is that recency bias.
So I would say, Tamanna, that there are different segments of the market, and it will be important for us when we embark on this project to really see which is the customer we are focused on. You're making an important observation that when we look at a unidirectional market almost, or a strong market like we've seen in India for the last couple of years, there can be a recency bias, there can be a lot of money flowing in because of past performance and past returns being extremely attractive. And then one thing leads to the other, and because one part of the market has done well, more and more money flows into that part of the market. Despite the fact that a lot of fund managers and a lot of experts will caution against just being over-concentrated in one part or one aspect of the market. So yes, there is behavior today which may be sort of, chasing a certain, recency bias or a certain amount of return. But I wouldn't say that all customers are doing that. And certainly what we see is that, investors who've gone through at least one cycle do become a lot more resilient. So if we look at the SIP, growth numbers today versus, let's say, 8 or 10 years back as a point in comparison, we do see behavior which is a lot more resilient. We do see that the top up in SIPs, because once you've experienced a good thing, you're more liberal with the amount of savings you want to allocate to this form of investing. That increases. introductions to friend and family increases. So there are many factors at play, not just returns or recent returns, that I would think is helping the industry build up steadily on the SIP book.
Yeah, Monika, your take on this, that we'll have to admit more people will want to come into participating in the capital markets when markets are doing well. That kind of insight that let's come in when markets are falling may not necessarily have spread everywhere.
That's right, Tamanna, but I remember the Sensex at 2000 when I started work. We're at 70 plus, whatever.
Yeah.
The markets long term, and just this conversation that in a growing economy, markets go up long term. Just this communication that should you stay long enough. I did this one exercise with numbers. I think I might have mentioned it, but India's unluckiest investor who bought 1 lakh worth of Sensex every year at 52-week high for 30 years. So she puts in 30 lakhs. She's the unluckiest investor because she buys every year on 52-week high. At the end of 30 years, her 30 lakh is 2.4 crore. Right? So just these kind of messaging that it takes time. This is not Maggie noodles. This is a slow cook. And therefore, the product choice is so important. Therefore, I'm saying an index fund, because then you know with a certain level of certainty that there is a formula which decides your index growth depending on both GDP and inflation. So my problem is that we don't want to scare away this new fledgling investor by introducing too much risk suddenly. It might sound paternalistic, but the limit is only for a 250 rupees SIP. The minute they move to 1,000, they have the entire market at their disposal. So just that if there is a major push, then the choice is restricted, but nobody's stopping them from going to another by increasing the amount of the SIP and choosing anything else in the market. So we'll have to do this in a graded manner.
Yeah, it needs to be done in a graded manner. It's an idea whose time has come, and we've already seen the power of the Indian investor. We've seen it through the last full year, and it's only going to grow. It will be potentially a game changer if enough Indians participate and trust in what the capital markets can give them. Thank you so much for this conversation, Vishal, Kapoor and Monika Halan. It's been an absolute pleasure speaking to you. For all our viewers, thank you for tuning in, but a lot more coming up after we take a break on this show. Keep it with NDTV Profit.